the Nigerian stock market, of course, as we just said, finishing Friday, positive territory. We also had news of slightly better than expected second quarter GDP, 2.5%, even as the new labor survey report caused quite a stir amongst economists, policy analysts, and others. On the market street, the SEC, of course, quarterly market-wide meeting was held, even as investors focused on corporate actions from big names such as MTN Nigeria. Now, as we raise the curtain on the final market week in August, we have, of course, Mr. Johnson Chukwu, Group CEO at Cowrie Asset Management. Good evening to you, sir. Always good to have you on the show. To kick things off, what should the market make of the latest Q2 GDP figures and the new labor survey, sir?
Thank you, Lotus, for having me. The first thing that came to my mind when I saw the GDP figure at 2.51% is that it's actually an improvement over the Q1 GDP figure of 2.31%. Although most people are comparing it to Q2 2022 GDP of 3.54%. But if you compare it to the first quarter GDP performance, it's actually an improvement of 220 basis points. That then means that the second quarter GDP performance was not as bad as people actually were expecting. But the concerns will now be that when we look at the macroeconomic environment in the third quarter of this year, one is likely going to believe that we are going to come up with a GDP figure that will be far worse than the GDP figure for the second quarter of this year, because you've seen a lot of slowdown in economic activities as a result of the increase in fuel price, increase inflation rate and other cost of living, and the erosion in household purchasing power. So the GDP figure in Q2 may not be a good proof of where we should be, where we're going to be end up this year. But at least one could actually begin to imagine that the IMF projection that the GDP will grow, Nigeria GDP will grow at 3% this year is not likely to be achieved. Because if you grew at 2.31% in the first quarter and you grew at 2.51% in the Q2, that means you need to grow at more than 3.5% or 3% in the next two quarters to achieve an average growth of 3% for the full year. Then on the labor, on the unemployment report that came out, for me, it's actually the primary objective is confusing. I mean, because if you consider the fact that that report says that we have an unemployment rate of 4.1%, the logical thing is to believe that you have near full employment if your unemployment is 4.1%. But so you need to read the detailed report to realize that for now, the basis of that computation is on the fact that you don't have up to 1 hour work in a week. And an average Nigerian will certainly, even if he's a cripple, will want to do something to survive. So if you use that as a basis, you are going to have a full employment. So for a business leader, I don't think it's a good, the summary is a good tool for decision making, even for government officials, because the tendency to believe that we have a near full employment is there. But for a business leader, if you have a near full employment, it then means that the cost of labor is going to go up, because labor will be, the market for labor will be a seller's market, no longer a buyer's market. The labor force will determine the wage that they should earn. But that's not the reality we have in the country. That's why I say that the outcome, the final outcome of that report, unless you go through the details of it, for you to be able to make a decision, is the difficulty for an average person to use as a tool for decision making.
Thank you so much for the breakdown, sir. Is there anything else on the political and economic horizon to drive investor sentiments in the near to medium term?
I think the most defining factor will be the outcome of the Presidential Election Tribunal. That I understand the judgment will be given on 16th of September. So most people, business leaders, will be watching to see the outcome of that, because that will define the decisions business leaders will take going forward. What will be the outcome of that, the tribunal's judgment? Because it could lead to a continuation of the current administration, or could lead to a stopgap that could affect decision makers in the economy. The other factors will be the performance of the second quarter report that will be coming from quoted companies. We know that some of the big hitters have not published their audited their half-year results. So we should expect that coming on stream in the next few days. and the outcome of that, the quality or the performance of that report will define the decisions most business operators will take.
All right, that's on the political side. Now, as far as corporate actions, you've touched on that, and market news. What would investors be focusing on, and why? Anything beyond half-year reports?
Well, a couple of things. I did mention the aspect that relates to the publications of half-year audited, not really audited account, half-year accounts of major banks and major businesses that are quoted on the exchange. Other factors will be the trend in the exchange rate. We've seen wide fluctuations in recent weeks. We saw the market, the Naira gaining about 2 weeks ago, and all of a sudden, beginning from last week, the Naira began to lose again. So the direction of the exchange will also be a major factor that will shape the positions or the outlook of the economy and the position that macroeconomic business operators will take. We already have the inflation figures. We have the unemployment figure, we have the GDP figure. These are major factors. And then the other thing that we have to also consider is the direction of fixed income yield in the market space. We've seen yield on treasury bills go as high as 13% at the last week auction. So that will also determine whether there be a withdrawal of liquidity in the system, whether we should expect increase in lending rates within the Nigerian business environment.
Is there anything else to look forward to as far as the third quarter is concerned, as far as sentiments? Do you say you've already touched on that? We're looking into a new month of September, Friday. Well, anything at all to pick up on?
Well, for the month of September, well, we will expect to see the decisions that will be taken by DMO in public or in offer of debt instruments, whether will lead to that will attract foreign portfolio investors into the economy and help stabilize the exchange rate. So a lot will depend on what the monetary authorities does. Of course, the fiscal authority will be expecting policy pronouncements that will help guide decision makers on which direction the economy will go from September to the end of the current fiscal year.
Mr. John Chukwu, I want to ask you, as we look, we still have a tribunal, we still have, a government that is still in its early days. Do you look to 2024 for actual tangible growth for the Nigerian economy? Do we write off 2023 is my question to you, since we're already in the latter half of the year, or do you think anything significant can still happen before the year is over? A couple minutes before we wrap up.
Well, it depends on what the outcome of the Presidential Election Tribunal pronouncement is. If the pronouncement is for a rerun of the election, then we're going to see the next couple of months purely dominated by political activities. If the status quo remains, then we should begin to focus on economic policies. So a lot will depend on what happens on the 16th of September.
I have to, okay, I'm glad we still have a minute to go. The all-share index, I think with today's gain, should be at 30% year-to-date gain. Mr. John Chukwu, is there a disconnect between the NGX and the wider economy, or does the stock exchange reflect what we're seeing in Nigeria's economy?
Well, not exactly. I mean, we saw in the month of January, February, March, the market gained. Then from April, May, the market went down because of the outcome of from March, April, the market went down. And then by May, after the pronouncement of removal of subsidy, the market went up. So we've seen the market follow the macroeconomic environment, follow the optimism or lack of optimism or pessimism in the economy. What we have today is that a couple of factors determine what direction the all-share index will go or the market will move. When you have low interest rate environment, the people will underweight their portfolios in fixed income instruments and overweight them in equities. And that's what we saw in the past couple of months. We saw a lot of liquidity in the system. And then because we also live in some level of an island where investors do not have the way we try to just go and invest in instruments outside the country because of the non-convertibility of the currency. So you see major portfolio investors like the PFAs are limited to Nigerian Naira instruments. And once yield on fixed income instruments is not favorable, they will vote for equity instruments.
Mr. Johnson Chukwu, Group CEO, Cowrie Asset Management. Always fascinating talking to you about the economy and the markets. Thank you so much for your time. Really appreciate it.